Hey everybody, this is Jim at SP500chart.com. It's 4:15 p.m. on the East Coast, March 28th, 2013, and we're going to use some time-honored techniques to try to understand modern markets, featuring this daily technical analysis video of the S&P 500 index. But before we go, got to remind you, the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy that draws lines on charts. Let's start out with a 15-minute chart. Just want to show you we've been looking at this little pattern right here, an ascending triangle. Ascending triangles typically produce a move that breaks the flat top, and we got a little bit of that today. You know what I'm going to say? I'm going to say we didn't get enough to say that this is really technically significant, but you know, that's what we're dealing with when we are looking at these really small patterns. And I know this looks big on the screen right here, but if we back out on a daily chart, you can see where'd the pattern go. It's gone. So going back to this, there's the pattern. One thing I can say without hesitation today, and that is our inverted head and shoulders pattern now has nothing to apologize for in the way of maybe not quite meeting that target, because we are actually over that target by a small bit. So there you go. Another inverted head and shoulders pattern works. So what's new? Look at how many we've seen in the S&P and how many of them have worked. They've all worked. This one is a sloppy thing, but it did generate one here. This one worked, and so far they've all worked. And our head and shoulders tops have all been working too. We are not looking at a head and shoulders top currently. We may be in a bit, but not yet. So we now look at this and we say that we would expect a move based upon where we got the first reactive move off of this top line. Measure the height of this pattern, put it right here, and we end up now with a target of, drum roll please, about 1593 and change. Now, we've been looking at this channel line that used to be really reliable support. It broke, and since it broke, you can see how the S&P just kind of hugged this line for about eight or 9 days. Then it went sideways to consolidate to serve as a continuation move. In all likelihood, this looks like it's going to be a continuation move. Again, this level right here is at 1565, and today's high was almost 1570. So we're talking about having only broken this top line by about 1/3%, and that's in iffy territory, okay? But let's say we get a little bit more mustard on this, and tomorrow we solidify this move with a technically significant breakout. Then we would be looking at a target, like I said, 1593 and change. And this line that used to be support should now be resistance. So if we snap a horizontal line right here, you can see that there is room for that target to be met while still sort of, if you will, while still obeying the basic rules of technical analysis. What I mean is, once a support line breaks, it tends to be resistance. It tends to turn into something else. Just like when you break a horizontal line, it tends to turn into support. So, all I'm saying is, if we do not violate that technical analysis tendency, then we've got a pretty easy path up to 1593. And it would only take 5 days to reach that point and to say, here we are, we've arrived, this pattern also has worked. Now, one thing I want to point out, we've been looking at a lot of inverted head and shoulders patterns, and this looked like it might have been one, but it's not. And I don't know if an ascending triangle is quite as, what's a good way to put this, is quite as bullish as an inverted head and shoulders. So the fact that we're dealing with a little bit different pattern here may tell us, I don't think I want to go there. What I was going to say is that it may tell us that we're not quite as strong, really, as what this looks like. Because, pretty soon we'll be up around this 1600 line. If this pattern plays out, we'll be right up there near it. And that's going to be real interesting when we get there. It's going to be real interesting to see what happens. By the way, from my reading of some news articles and things, it appears to me that nobody's afraid anymore. Despite the issue going on in Cyprus with the banks being shut down, with accounts being raided to the tune of 40% by the government, despite talks of the same thing possibly happening in other European nations, Spain and Italy in particular, despite a disappointing jobs number this morning, despite a disappointing rate of growth that we were hit with this morning. Despite all these things, this market right now is impervious to that. And you might think at first glance that whoa, that really means it's a strong market. Well, what do they say? They say bull markets climb a wall of worry. And how many times over the past 4 years, from March of 2009 till today, how many times were we genuinely concerned and worried about economic developments? How many times did those worries create sell-offs as we continued, however, to plow higher and higher? Here's my point. If you reach the point at which nothing seems to faze the market, I wonder if that means a top is near. Because where's the worry? People seem to be perfectly willing. Just put it in the market. Just set it and forget it. I may be wrong about that last statement, but certainly the market lately has been shrugging off everything, and yet look where we are. This is amazing. Look where we are in this chart. We were all worried back down here. Now that we're reaching this line up near a new all-time S&P high, no one's worried. That makes me worry. So that's all I'm going to leave you with today. It looks to me like we are on track to plow on up, get on up there. As Larry the Cable Guy would say, get her done. It looks like it's going to happen. We've got that target now about 1593 and change. That can hit without getting above this line in about 5 days. Wouldn't surprise me if we do that. One thing to remind you of. Well, I'm not going to remind you of anything. If we get up to this 1590 something 1600 area, it's going to be real interesting to see what happens. Because the Dow has set a new high. The Russell set a new high. NASDAQ, it's going to be a while before the NASDAQ sets a new high. But here we are, about ready to set a new high, and you know the headlines are going to be screaming buy, 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 buy. And on the psychological level, that should concern us. And I'll be honest with you, I feel that psychology at work in me. You know, I've got a fear. Let me tell you what my fear is. My fear is we're going to get over 1600 and just keep on going. Now, why would that be my fear? Well, because that's kind of the sentiment. That's kind of what people are expecting. And my fear is that I might miss out on that because I'm way mostly cash right now. And the fact is, there will be a big pullback at some point. There will be opportunities at some point after big corrective moves, 10, 15 or more %. It's not going to just keep going up forever, and I would rather wait for a good, solid pullback than take my hard-earned money and throw it right now where we are in this historical chart. Where we are right now, this does not look like a good place to throw money at the market. But you know something? A lot of people are. So guys, I want to thank you for taking time out of your day to watch this. I want to thank you for your subscription, and I want to say sincerely, I hope that this gives you something to think about. I don't want to tell you that I'm just looking at it and trying to be as realistically as I can. I'm not looking at this chart and saying, hey, we got all these gaps down here. They got to get filled. This is bogus. This is not bogus. This is a genuinely strong market. But we have to now consider the sentiment of the market just sloughing off like Teflon. Things that should be significantly concerning as it relates to worldwide economic health. So, just saying. Thanks for watching. Take care.